Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. It is Friday, and we're almost at the big weekend, the big, Memorial Day, the big, the big, the big Independence Day weekend. I'm going to be going down to Austin, but I'll be here for a little bit, of course, until the show's in, and just want to kind of get into some of the slides here. And let's do that right now as we speak. I'm going to see if I can get that window up. There we go. All right. So, okay. Well, it basically is Friday, as we say. The market is in a confirmed uptrend, which is a good thing. And it looks like we're moving very, very nicely above about that 14,000 level, and that's a key level because that is showing it is continuing its move up. We're nearly at the all-time highs on the Nasdaq and on the S&P, so it's looking very, very good, at least for right now. Now, we may get a pullback, but at least for right now, there seems to be a movement back into some of the big cat techs. I kind of wanted to show you what stocks that I have. I did buy two stocks today. Kind of interesting. I did buy a position in Apple, and then I bought a position in this one. It's called Santander Commercial, Santander Consumer, and it's a very interesting stock. I'm pretty familiar with it because it's based right here in Dallas, and it's essentially the parent company is a Mexican company, very good company down in Mexico, but they have a consumer division here in the U.S., and they're very, very aggressive when it comes to automobile finance. So it just had tremendous earnings, and it just pushed right up, and it's a pretty cool thing. So just wanted to point that out to everybody. Here, let's get the banner up. Get that banner. There we go. All right. Oh, wait a minute. It's July 4th. It's actually the 2nd today. So let me change that. Make sure that is indeed right. Okay. That is the 2nd. And one. I think that is correct now. Yeah, there we go. Okay. There we go. All right, so we're now cooking along. But anyways, I just want to show you that one Santander, very interesting company, and one that you might want to definitely consider. Here's my allocation right now. Most of it, as you can see, is in DocuSign. I have a lot in DocuSign, done quite well in it. As you can see, here's the ads for Santander, and then I did buy a full position of Apple. Everything else pretty much is a half position, with the exception of CrowdStrike. I have a full position in CrowdStrike, full position in Apple, and 3 full positions in DocuSign. The rest are half positions. And if you're wondering what I'm doing there, why I'm doing that, well, one of the things you want to do when you're allocating your capital to any particular portfolio is you don't want to put obviously all your eggs in one basket. You want to kind of have that spread out. So what I do is I use a system where it's sort of like a pizza, and the way it works is, let's say you have a $8,000 portfolio value. Well, if you divide that by 8, that gives you 8 full positions, each of $1,000. So when you go into a stock, you typically go in with a half position. So that would be $500 worth of whatever stock you're trading, and then as it improves, that's when you add to it. So I typically if the stock shows promise, then you continue to add more positions. But you kind of pyramid into the stock, and the advantage of that, of course, is that you're going to limit your exposure to any one stock, and that could be a very good thing. So that's what I'm done here. Essentially, I have quite a few names right now, more than I normally have, but that is because we have moved really from a market trend under pressure to a market trend the market trend is fully moving up now. So that's the kind of thing you've got to watch out for, and that's part of the way that I put that in there. So without further ado, let's get into some of the slides here. So let me go in. Let's see. Let's get the charts up here because they're very important, of course. And there we go. So that should be the charts. There we go. All right. So thanks for waiting, everybody. And oh, hey, wait a minute. I need to put my I need to show the people over in the Discord room. I gotta put up the give them the link to the live broadcast. So there we go. Let's just bring that up, and there we go. Kind of a just pulling the link to everybody that's in the Discord group right now. So I'll get that here in just a second. I should have had that ready to go when I first came on, but I did not. So let's go ahead and share that out. Pulling the link to everybody that's in the Discord group right now. So I'll get that here in just a second. I should have had that ready to go when I first came on, but I did not. So okay. Yeah, just pasting that there. There we go. All right, so now we're back cooking, and we're back in there. Okay, so thanks for bearing with me there. And let's go to some of the questions. All right, this is a question from Arun. Thank you, by the way, for joining your Discord. Thank you very much. Can you ask questions? Okay. Absolutely, absolutely, definitely ask questions on options. What I do use option strategies, and the reason I do that is because sometimes, you know, when you're going in stocks, you know, stocks really, you make money as the stock is going up. But one of the great things about many of the option strategies that can be employed is that you can make money if a stock is going down or if it's going sideways. So that can be a very, very, very good thing. Let's see. What are your thoughts on GE? Very interesting company, of course. General Electric. I mean, probably everybody has something from GE. I have a refrigerator. Oops, come on. It's not letting me go to the. Okay, let's see if I can. Okay. All right. Well, let's see. I put this. There we go. All right. So let's go to GE. Let's go to the chart for GE. Now, hopefully, I'll get it. Hopefully, I'll get a cursor here in a second. I'm not. It's not allowing me. There we go. Okay. All right. So I'm trying to, okay, see if, I'm afraid I had an error. So I apologize for that. Let's see if I can get the, let's see if I can get a window up here for GE in just a second. So let me just do that. All right. A little bit slow, a little bit more latency here. There we go. Let me. There. All right. Thanks for holding there. There we go. There's GE. And let's share it out. All right. So basically, here's the thing about GE. GE is going to be doing a reverse split. Part of the reason they are is they want to get their share price higher. A stock that's under about $10 a share is a problem. Now, GE's price right now is about $13, and it's moving up nice. But they have announced plans to do a reverse split, and what that does is that takes existing shareholders and then puts them all as one. Now, normally, a reverse split is not the kind of thing you want to see. It really isn't. A reverse split is something that is going to be problematic for many times. So reverse splits are not necessarily the best way to go. But in this case, with GE, I mean, they do have a continuing business, and their fortunes are looking up. So that's something to look at. Oh, by the way, I just want to say that shout out to Larry Culp. He was a classmate of mine when I was in undergraduate school at Washington College, and he is now the CEO of GE. And I think he's doing a fantastic job. I don't. He's so far above my pay grade. It's not funny, but I just want to give a shout out to him. I think he's doing a great job, and I think this is a great company, and I think it has some very good potential. But I probably would not be a buyer right now. I kind of want to wait for them to go through their reverse split, just because I think that might be key in terms of it. Before I really want to start trading it, I want to see their reverse split over with. Normally when I do this, I like splits going forward. I like reverse splits. I'm a little bit more leery on, so I'm a little bit more careful with reverse splits. So here's the thing: I don't know the exact date of the reverse split. I could probably look it up, but I don't know the exact date. I knew that they are considering it to get the share price up to where it's in a good trading range. Unfortunately, from many of the years, with what went on, their share price went way down, but the reason they put Larry in is because he was at Danaher, CEO of Danaher, very, very successful. And I have no doubt, I like to pick, not only do I like technicals on stocks, but I also like management teams. And I think Larry Culp is absolutely one of the best in the business, to be honest with you. So I wouldn't bet against them. I just wouldn't be right in the stock right now because I want to see that reverse split go forward. So thank you very, very much for that question, Kate. It's excellent. Excellent question. Let's look at MRIN. Let's see if I can get having a little bit of, let's see if I can shut some of these things down. I have a limited bandwidth, unfortunately, here. So let's see if I'm going to shut down the Discord feed. There we go. Okay, so maybe I can get a, see if I can get my cursor to go there. So, okay. I'm going to try to see if I can get another, see if I can get the charts up again. So let me do that really quickly here. All right. And I'm going to go ahead and go here to the charts. Okay. Thanks for bearing with me. I'm broadcasting from home today, and I don't have my normal setup. So this is an experiment to see if I can do it. Do it mobile. We're trying. So that looks better. MRIN. I just have to be very wary of the bandwidth here. Okay, there we go. Marin Software, super. All right, thank you for bearing with me there. Okay. All right. So here's Marin Software. Basically, we had a spike here, and it looks like there's some kind of blow off top capping. Let's take a look to see if we have a situation. We have a short squeeze situation. So I'm looking at the short interest, and it looks as if there's okay. So the short interest went down. Okay. So no real short interest problems. I'm going to kind of look at the monthly chart to kind of get an idea of how Marin Software is trading. It looks as if it was much higher back in the day. I mean, it's been around since 2013, and it looks like it has moved down since then. So here's the thing. I would be a little bit leery about this. I don't know exactly what's happening here. I'm seeing an awful lot of activity. Obviously, somebody is coming in here huge. I mean, the volume is up 65%. So we've probably already lost that first mover advantage. Don't quite know why that is happening, but I'm gonna switch over to the daily chart, and it just looks like it's off the charts. I want to see this the 5-minute chart to see if kind of what's happened here. I don't know if there was news or whatever what happened, but for some reason we had a situation where we had we had a lot of this is a very odd pattern. It just seems to be all over the place. So somebody seems to be acquiring this. Don't quite know. I'm going to move to the 60-minute chart to see kind of on a weekly basis, just kind of see, yeah, exactly. So something happened here. There was some kind of, basically 1, 2, 3, 4, 5, 6, 7, 8, 9 days ago, something happened. I mean, this company literally was flatlining, as you can see, and then it just took off for the moon. So I don't quite know exactly what's happening here, Katrina. I'd like to give you I'd like to give you a good answer on it, but I can't seem to tell with this one. So I'm going to have to pass in terms of giving you an idea of what's going on here. I just can't understand this. This doesn't really make a lot of sense to me, but I don't have all the information that I probably need. So that's probably the issue here. Okay, so let's go over to TikTok, and okay. Oh, hey, thank you, man. Thank you for watching. I so appreciate it. What do you think about KDP? This is a question from one of our people on TikTok, and it's so KDP. Let's look at that and see if we've got something going on there. Oh, Keurig Dr. Pepper. Boy, all these Dallas companies. That's right up in Plano for everybody that is in the area. It's it's the Keurig Dr. Pepper, and the drinks business. This is one of the all-time great businesses, really, out there. So it's so I really do like this area, even though consumer packaged products are not necessarily right now the best thing, but we're right at a buy zone. Okay, so we're right at a buy zone. So this is not a bad one to take a look at. Here's the thing: we're definitely trading above the 200-day line. That's very, very good. We're up. We're right below the 50-day moving average, and now and it looks like we're in the process of a reversal. So I'm going to go over to the weekly chart. I'm going to check to see if we have a reversal on this, because that would be a very good thing. So I do believe we have a kind of a very slight, and I'm going to try to draw a line here. Hopefully it'll come up here. Well, okay. So I'm gonna draw a line. So we sort of have this. This is the trend currently. It's downward sloping, but I do think that we are in a situation where we may be trading up. Yeah, we definitely are. So here's the thing: I wouldn't buy this one right now because of the volume, but I would consider possibly buying it if it moves above the 50-day line. And currently that 50-day line is at about 37. So here's what I would do on this one. I like this one. I do think it's going to move higher. It's consolidating, and it looks like it's moving higher. So here's what I would do with Keurig Dr. Pepper. I wouldn't buy it right away, but I wouldn't watch this one. Instead, what I would do is I would set a buy stop limit order, and I'm going to give you that in just a second. So let's see if I can do that. So I want to see if I can set a buy stop limit order, and let's see if I can do that one. And where I'd like to probably come into this issue is at about 37 as it's moving higher, and then set the limit for 37.10. And the reason you do it this way is because sometimes you don't have the ability to watch, to watch it all the time. But by setting these buy stop limit orders, what you can do is that as the stock moves higher, you can get it as it moves up. It's always better to buy as the stock is moving up, and this is really an alternative to using a market order. And I use market orders a lot, but I'm starting to really use the buy stop limit orders because they execute, and I don't have to be there all the time. So, and also with some of the platforms like Thinkorswim, you can actually get it so that you can set it, and then if it executes the buy stop limit order, then it will immediately throw down a stop limit, so that if it pulls back, it sells you out. So it protects your capital. I'm working a little bit on that. I'm going to try to show that with hopefully some videos or something like that, because I think that's a really, really great way to buy stock. But I like Keurig, and I don't want to buy it right now because it's pulling back, and we're after hours, of course. But if it moves above about 37, about 37.50, a buy stop limit order might really, really work on this well. So that's kind of something that I think you might want to take a look at. What do you think about Wish? Now, interestingly enough, I have a spread right now on Wish there was a lot of activity on Wish. And I'm gonna pull that up on the screen. And by the way, if you're looking on TikTok, you can jump over to the you can just jump right over to the feed for the YouTube channel and see all the charts. I can't show, unfortunately, the charts on TikTok because of the way it's configured. But if you jump on over to that, you can see it. So just go to my profile, click the link, and then scroll the way down. And by the way, as a bonus, everybody, I have a really, really nice trade on Home Depot. It's a Home Depot calendar spread, and it's available on Beacons for the TikTok users exclusively. You just go to my profile, click the link, and then you'll see this thing called Beacons. Just go on through to Beacons, and then you will see a trade for Home Depot as well. So that's kind of a nice little bonus for everybody on that's trading on that's on TikTok. So let's take another question from the feed from YouTube. So that's fantastic. How do you identify a sector rotation? Very, very good question. The sector rotation basically what happens is that periodically money moves from one part of the economy to the other part of the economy, and the way it's been moving for the last 3 months is it's been moving out of tech into some of the inflation hedge areas like the oils. Now we're starting to see the techs come back in, but the way you identify it is you look at the sectors and which sectors are doing the best. So what I'm going to do here is I'm going to pull up on the screen. I'm going to pull up a listing, hopefully, if this there we go, of all of the sectors of the economy. And I'm going to show you which are the top performing sectors, and this is where the capital is moving to. So hopefully, if I get there, we go. Okay, well, it almost worked. Let's see if I can get it all the way up. Oh no, it didn't. It's giving me fits and starts. It just doesn't want to. Yeah, I'm a little bit bandwidth constrained here because I don't have a direct connection into the internet. I'm using wireless, and unfortunately for my system, it doesn't quite have enough bandwidth. So let's see if I can get that up here for you. Well, let's see if I can see it. Well, okay. It's not allowed. Okay, it's a little bit slow, so I'm trying to make it work here. All right, so let's go to the industry groups. See if it'll let me go there. It's taking me a second, so I apologize for the wait here. But here we go. I'm just going to put this up, and it's going to be a little bit painful watching this happen. But hopefully we'll get it going because I am broadcasting from home today, so that's part of the reason for the limited bandwidth that I have. Okay, well, basically, what we're doing here is I'm trying to get up these sectors, but I can tell you. Oh, there we go. Okay, so I'm looking at the industry groups. Well, it didn't work. Unfortunately, I don't have enough bandwidth to do this. But trust me on this one. Basically, Ambrose, what's happening? What's happening is you look to see which sectors are improving and which sectors are not improving, and that gives us the ability to see kind of where the capital is going. The capital has been moving away from some of the big cap techs until very, very recently. But now it's starting to flow back in. So there we go. I think I now have the ability. Okay, one more click. Hopefully, there we go. Okay, so let me kind of show you the list here of the different sectors. Well, currently, the #1 sector in terms of where the capital is moving is the oil and gas sector. So that's where we can see some very, very good potential trades. Also, the consumer electronics area is good too. This is where GameStop is, by the way, interestingly enough. And the departments, so the retail department stores. Now, these all were beaten down heavily over the last year, so it's basically a dead cat bounce. But there is an interesting area here that I really, really like, and it's really odd. It's retail apparel, shoes, and accessories. And I found some very good ones in there, like Crocs, and also Lululemon is in there. So some very good. So that's kind of what we're looking for. Right now, some of the areas in the market, like the techs, are much lower. The money has flown out of them. So long story short, what I'm always looking to do is seeing which areas in the market are performing the best. and that's where I concentrate looking for things to trade. So that's kind of what a sector rotation is. It moves from one sector. In this case, it moved away from the tech sector into some of the more commodity plays, such as oil and gas. Oil and gas is an inflation hedge. It is the best inflation hedge. It's actually better than gold and Bitcoin and all that stuff, because it always will go up if there's inflation in the economy. And unfortunately, we're probably going to see a lot of inflation in the economy. So that's one of the reasons why there's everything flowing there. All right, Arun, thank you very much. This is CRISPR. And this, of course, is a gene editing company, very interesting company based in Switzerland. The thing about this area of the market, the biotech area. This is by far the most companies, even more than software, are in this area. So this is an area that is tough to trade because there are just so many companies that are in this area. I typically like to trade ETFs in this area just because it gives us a better look in terms of what we can trade. This is CRISPR, and after hours, it's doing very, very nicely. It's moved up about 1%, about 1.28% after hours. There was some very, very heavy buying in here. It's settled down a little bit now. This morning, I out of the gate, I took a flyer on Space, Virgin Galactic, and I didn't read it right this time. I'll tell you, I bought it as it was moving up on a buy stop limit order, right about 54, and then it pulled back, and so I was sold out at 50, and it dropped to 40 to 45. So sometimes you can't, when it comes out of the gate, you don't get it right, and you don't get in those things right. But this pulled up, it's pulling back. It looks as if, and I want to draw a diagonal here to show you basically the let's see if we could get there's the temporary pin. See, this is the reversal line. I just want to kind of show everybody this. And what am I doing? Well, what am I doing here is I'm trying to see if this stock is trending higher. Okay, now currently it is trending higher because this is how you draw a trend line. And you can do it on the daily or the weekly charts. Actually, it's better on the weekly charts, but it's easier to see here on the daily charts. You go to the high, and the high in this case for CRISPR, 228. You draw that line and you connect it with the local high at 137. If it is above that, that means it's moving to a different trend. So that's very interesting. So definitely CRISPR is on an upward trend, and we always want to buy an upward trend. Not only do we want to buy an upward trend, but we want to buy on an upward on volume. That's one of the reasons you use the buy stop limit order. Well, here's the thing. We're starting to move up. It punched up here, but it's pulled back a little bit. This is a very, very common action. What'll happen is stocks don't move up smoothly up or down. They kind of go through these steps. They push through resistance, and then they settle, and then they push above the resistance once again. And that's definitely what's happened here. So the question is, can we buy this? Well, I do think we can, possibly off of this 10-day line. Now, I don't know if you can see it on this chart, but this is that little pink line. And basically, so here's what I would say about CRISPR. If you want to get into the stock, and this is, in terms of the gene editing stocks, this is one of the very, very best of them. There's another one called Edit as well. It's very good. But if this pulls back to about 144 and then reverses higher, it's about $10 lower than where it is now, then I think you could possibly get into it. I probably would not get into it right now because it is essentially not at a pivot. The next real pivot is going to be, micro pivot is going to be here at about 175. We're a little bit off that. We're at 155. So I probably would watch list this one for now. But I think it's a very, very good stock, and I think it's in a great area. And I think there's a lot of there's a lot of interest in this area. I think it's a great area to be in. So I would watch list this one, CRSP, CRISPR, and I just think that that's probably the more prudent approach at this point. So what I would do with CRISPR right now is I would be watch listing. I would be watch listing. Oops, there we go. I'm sorry, I got a different message there. I would be watch listing this one because I do think that it is going higher. But remember, we always want to buy as the stock is moving higher. Right now, it has an upward trend, but it's pulling back. So we've got one of the two things. We don't quite have the right way. We're not quite in there correctly to buy it. Also, we don't have a full base here. Now, what do I mean by full base? Typically, what will happen is the stock will trade up, it'll go to a high, and then it will reverse down, and then it will come up, and then it will cup. It will form a cupping pattern. And then as it moves through that higher high, that's a really good place to buy it because that is a buy point. Okay, so a lot of I'm talking a lot of stuff here, so maybe a little bit too involved. But again, this is not an exact science. I want to say this is an exact science, but the way stocks trade is they sort of trade in these ranges. They will go to a buy point and then they'll punch through that buy point, and then that will form the floor, and then it will trade up until we get to the top of the channel, and then it will oscillate typically within that channel. If there is a sufficient upward pressure, then it will pop up once more. So why do stocks go up? Well, people think stocks just go up because they go up, right? That's not true. The reason stocks go up is because the people that are holding the stocks refuse to sell. So people have to bid the stock price up. Now, in the parlance of the market, these are called strong hands. Typically, the strongest hands are going to be the people that are in these that are funds. They're going to be the strongest hands. They don't have to sell to pay the mortgage. They don't have to sell to pay the mortgage. So typically, what will happen is a stock will the price will basically move down as long as the weak hands are selling. But then when people stop selling, the strong hands hold the line on the price and the stock moves up. So that's why stocks, they might move on certain news, but typically what really makes the move is the strong hands that are holding them. So that's something that you've got to always kind of be cognizant of, when you're buying a stock. All right, let's take a look at IIPR. Let's see if I can get that up here. All right, well, there we go. Innovative. Oh, okay, this is the Marijuana Property Company. Very familiar with this one. By the way, this has been, in terms of the cannabis space, this has been one of the best stocks to play in the cannabis space because it really isn't a cannabis stock. Really what it is it's a specialty landlord. And I think this is a great way to play the cannabis space. I'm much more interested in innovative industrial properties than I'm interested in something like a Tilray. Not that there's anything wrong with Tilray. It's just that this, I think, captures the profit of this space much, much better. Now, we're in a consolidation, and the low on that consolidation, basically, see if I can read it, is about 162.81. And the high is about 220. So we are in a upward trend in that consolidation. So would now be a good time to get into it? Well, it's a weak movement up, but it's a movement up, and things are looking good for this. It's got a relative strength of 70, 78. Now, it's not quite as good as I like to see it. I like to see an 80 here, but I'll take it because we're in a market that's been rotating out of some of the weaker sectors. So this is not bad. We're above. This is the 200-day line. I like the fact that we have an upward trending 200-day line. That's excellent. We have an upward trending 50-day line. That's also good. We have the 21 and the 10. So everything is looking good. From what I can see on the indexes and the volume, we have a trending stock and it's trending upwards. Now, can we buy it at this level? Well, I think that this is not a bad level to buy it at, but I would probably want to see if it can cross the 200, the 200 price on the pricing. If it can cross that, I think that would be excellent because that would then go to a higher level. So I like this one. I think you're at a good place. Now, would I buy a full position in this at this point? No, I probably would not buy a full position in this place. I want to let it see. I want to see it go above. I want to see it go above 200 before I would be buying it. So again, and I've been Mr. Watchlist today. I've been showing you ones that I would watch list. I would watch this one. It's a good stock. It's in a good area. It's got a very, very nice track record. This is the way to play cannabis, in my opinion. Very good stock. I want to see it go above 200 though. before I would probably buy this one. So I do want to show you a stock that has broken out, and I did buy some of this morning. It's an interesting one. It's essentially an automobile finance company based here in Dallas, and it's called Santander Commercial, and I really like this one. First of all, I know a little bit about this stock because I have friends in the automobile business here in Dallas, and this is one of the most aggressive banks. So if you go in to the dealership and you want to buy that new F-150, and you don't have the greatest credit, check out Santander because they'll lend on not so perfect credit. As you can see by the notation, I bought in as we had this incredible spike here. I do think the fact that we sometimes we don't have a full cupping action. It basically, why did I buy this? Well, it had previously come up to this 39.40, 39.10 level, and then that was sort of resistance. Then it pulled back, and then normally it would come all the way back up in a cup, but sometimes what happens is if there's an event like good earnings, which they had here, it will just pop up, and it'll pop up above the higher high. The higher high was 39.10. So today it popped right above that. So I do think that this is now going to continue on this upward trend. So I did buy a half position in this in the small portfolio. I'm going to kind of draw a line there. So that's kind of the trend that I think that might be in store. I'm gonna actually put an alert on that line, and the reason I'm going to do that is because if it moves above this trend line, then I think it's getting ahead of itself. But I think that we have some definite we definitely have some room to grow here, and that's between about 40 on up to maybe as high. Let's see if I can. Maybe I can see this. Maybe about 48 or so. I think it's going to be pretty smooth sailing, and we're going to get a bump. We're going to get about at least a 5% bump here on this stock. The way I'm looking at these charts. So this is one of the ones I came into. Now, if it moves above this trend line here, then I'll buy another half position. I'll have a full position in my portfolio. But you might want to take a look at this one. It's called Santander Commercial USA Holdings, symbol SC. So very nice stock there as well. All right, so let me show another one here. Thank you, Henry. Let's look at MAXN. See if I can get that up here. MAXN. I think I'm finally getting on track here, where it's sort of working. There we go. MaxN Solar Technologies. This area has been kind of beaten down in the last few sessions. Why? Because there's been so much movement into some of the inflation sensitive areas that are going to benefit from inflation, and that of course is the oils. So right now this is not the greatest of areas. I wouldn't be a buyer of this, and the reason is it has nothing to do with solar. Solar I think has a great future, but right now investment in the market is against solar, and the reason I know this is because this is the 195th sector. So there's 197 sectors overall. I think the only thing doing more poorly than this is soap makers. I think that's one. So right now, solar just is not the place to be. I don't even want to be in that sector. Here's part of my game plan. I like to be in sectors that are seeing positive investment. Right now, solar is not seeing the positive investment. That doesn't mean it can't turn. But right now, I just think you got to be a little bit careful. This is in a downtrend, so I wouldn't be a buyer of this one. I don't even know if I'd be a watch list. I'd want to see this area, the solar area, do better. It's not a very good performing sector right now. People are selling this area, the energy solar area, and they're buying the oils. It's really strange. You would think with Biden as president that the oils would be doing worse and the solar would be doing better, but it's just the opposite, and that's what the market is saying. So very interesting. I would not be a buyer of this one. Just the solars just haven't done as well. It's just one of those things. Let's look at Upstart. Upstart's also a very interesting one. Now, Upstart, as you know, is a company that uses AI to do credit scoring, and I think this is really the future. I really, really think this is a great area to be in, and the reason I think it's such a good area is because um, doing credit is has been so subjective now. The credit bureaus have been a little bit removed from that. And of course, people don't. It's sort of like the SAT scores. People have every reason why they don't like them, mainly because they have low scores. And I know that was the case when I was trying to get into graduate school. I had to bump my scores up, to make myself look better. But one of the things about this upstart is that they are doing a lot of the AI in this. Now, this is of course a relatively new stock, and I mean it hasn't been out there all that long. It has found support at the 50-day line, so that's okay. Now, would I be a buyer in this? Well, it did reverse. I have the reversal line on here. It moved above that reversal line up to about $191 a share, and then it pulled back. So basically, this is a tough one to trade. I'll be honest with you. We have a very strong relative strength line, but it is retreating. Here's the thing that I would do on this one. I think I would wait on this one. I don't think I would buy this right now. I want to see this move higher, and specifically, I want to see it form a base. And currently, we have neither of those. We are trending lower, and even though we have support on that 50-day line, it's still not good enough. So I think you really, at this point, and I've had this one before. I've had Upstart before. I've never been successful with it right now, but maybe that'll turn around. I want to see this thing move higher before I would probably be in it. So that's kind of my take on Upstart for right now. All right, Olio, interesting. This is also this is a payments company, very interesting. OLO, I think that's the symbol. Is that correct? Yeah, Olio Incorporated. Yeah, okay. This is an online cloud-based payment system, and this is really big in the restaurant industry, by the way. So this one definitely is a stock that I think it is an IPO. And IPOs, I think can be very, very good. Here's the thing: it hasn't formed a pure IPO base right yet. There is a double bottom that is indicating at a pivot at 33.20. It's at 34. Would I buy this? Well, I'm not going to buy it unless it bounces off that 50-day line. But I think it's just really too early. I'm not loving this one as much as I like. We're in a little bit downward trend, and this is the daily chart. So even though we are in a buy zone right now for Olio, I want to see it move a little bit more convincingly. So would I buy this one now? Well, I might buy a quarter position, but I wouldn't probably buy any more than a quarter position. There is a buy point on it at 33.20. It's a double bottom pattern, which is good. It did break out from that, but it's pulled back basically to that resistance level at 33.20. So what would I do on this one? Well, if I did go into this one, I'd go in relatively light on this one, and I would be setting my my stop loss very tight. If I did buy this one, I would probably be setting my stop loss basically at about 32.50 is where I'd be setting it. So if I went in here, I would have a relatively tight stop loss on this, but it's a good company, and for an IPO, this is doing very, very well. So interesting company. I would not go into this one heavily, but you could buy it at this level. So very, very interesting. Jim, you missed my stocks early. Oh, I'm sorry. Let's look at TTI. I'm sorry. Sometimes I get going, and I don't I don't look at everything properly. So thank you for bringing that up. Let's see if we can come up. Yeah, Terra Technologies. All right, let's look at that one first. Let's look at TerraTech. We have a very, again, I like this area. We're in the oil and gas field services area, which typically will benefit if there's drilling activity going on, and definitely that's the case. This is the 18th sector, so we're definitely in the top 20% of all the stocks right now. So I'm liking that. Unfortunately, this one doesn't. This doesn't have a classical base pattern, but I'm looking at a place to buy this. Well, you know what? I would look. This is a very inexpensive stock. It's a $4 stock. Here's what I would try to do. I would probably try to buy this if it moved above about $5.10, because I think that is going to give us that's going to give us the higher high. So would I buy it today on a market order? Well, I probably wouldn't buy this with a market order, but I would look, if it bounces off the 10-day line, it looks like it is. Now I'm going to take a look to see how far above that 10-day line we are, just to see kind of where how far we are above that. Okay, so we're about 4% above the 10-day line. Well, you know what? You could actually buy it at this level. This is interesting. You could actually buy at this level. Now, if I did buy at this level, I would immediately go and I would set a stop loss right at about 360 on this one. But this is looking pretty good. I very much like this one, Gene. Very, very good. So would I buy this one? Well, obviously, this is not a perfect pattern to buy it. I'll be honest with you. This is not a perfect cup with handle pattern, but it's looking pretty good. This is a very low price stock, so it's going to be a lot more volatile. So you kind of have to play it a little bit differently than you normally would. But one thing I really do like about this is the way it's trading off of the 10 and the 21-day line. So it is definitely showing very nice response in the market. So what I do? I would probably, you could definitely buy it at this level, but I would set that stop loss immediately at about 360. And I probably would not go in with any more than about a half position, just because of the volatility. But it looks really good. It looks really, really good. Let's look at NOG. Let's look at NOG. NOG. All right. And that'll come up here in just a second. There we go. Oh, there we go. Northern Oil and Gas. This is also looking pretty darn good. I can see that you're definitely fooling around in the oil patch. I think that's a good place to be. As you can see, most of these stocks have done very well since, in this entire group have done very, very well. This is a very good area. This is the number one sector right now in the market, is oil and gas, and Northern Oil and Gas is no exception. This is very good. Here's the thing, just let your winners run. This is gonna, I hope you're already in this one, because you could buy it at this level, but I hope you're already in this one. Just keep moving your stop loss up. I think that this is the gift that's going to give a lot this year because of where you're at. You definitely, if you bought this, basically, off the 21-day line or at the breakout, then you are doing very, very well. And you'll notice, you can see this true. The last 2 months, May, June, and part of April, you can just see how well this sector has done. What I'm going to do is I'm going to flip on over and see if I can show you the entire sector. Now, this is the number one sector right now. So these are, I'm kind of looking for names of stocks that might be doing very, very well today. We definitely have one, Phoenix Minerals, now Whiting Petroleum, and Goodrich. These are all quite good. Let's look at Whiting, because it's at an almost all-time high. One of the things, it's a good practice to get in to, if you have a sector that's running like this, try to get into the leaders in that sector, because that will give you a very, very good look. Now you can see where I got in here on this is Whiting Petroleum. Now hopefully I can close this down. There we go. As you can see, the checklist is excellent on it as well. So all of the oil stocks typically have this very same pattern. We kind of came off that buy point there, and then they're moving up. Well, it's moving better than my internet connection. It's moving. There we go. So this is one that you might want to look at. This is not a perfect place to buy it. I will tell you, if you're using pure CanSlim rules, this is probably not the optimal buy point. But the U.S. oil and gas companies right now are all doing very, very well. So I think that I think that NOG is probably going to be very, very good for you. All right, let's look at ARK Invest. This is, of course, not a stock. It's an ETF, and of course, Cathie Woods she's done very well last year because she had Tesla. And by the way, that was my best stock last year as well. I have, and there we are getting to a point where you can start moving back into Tesla. It looks as if it's buyable between about 705 up to about 710. I haven't yet pulled the trigger on it, but I think that it's looking fairly good. All right, ARK Invest. This is ARK Innovation. So this is so this stock is essentially has the same. If you look at this is very interesting. Look at this chart pattern, and you'll see an almost identical chart pattern with Tesla. And the reason for this is obvious. Tesla is the largest holding of this ETF. So if we go over here to Tesla, you can see it has almost the same pattern. Isn't that interesting? And the reason is, of course, is because ARK ETF has so much in it. So my question is, why buy ARK ETF? If you really want to get the best way to make money, a lot of times, is not to dilute your capital. It's to get it into the things that are moving the best. And right now, at least if you're into this kind of Kathy Woods portfolio, maybe you might want to get her number one, her number one stock, and of course that is Tesla. Right now, Tesla is viable, but as you can see, I've drawn a little line here, and we have this kind of, you know, what I call this is railroad tracks, where it's just very tight pattern. This eventually, once we run out of once we run out of sellers, this is likely to move higher. So here's the thing: I would possibly be a buyer in Tesla above. I think it really needs to be above about 780. You could buy it. So instead of ARK, you might want to get the fund. You might want to get the stock that has the most. That has the most exposure to. ARK has the most exposure. Thank you very much for your birthday wishes. I am going to be much older than I ever thought I would be. So thank you so much for that, Abdul. I appreciate that. Very, very nice. And I hope everything's going for you all in New Jersey. And I hope you have a nice 4th of July. I know I will. All right. So thoughts on Apple? Yeah, absolutely. You know what? This is interesting too, because yesterday, guess what? I was buying Apple. Stocks, they don't always go up, but good stocks, they like Apple, they'll go to sleep for a while, and then they'll wake up, and when they do, boy, it could be really great. And I'm not saying that Apple is going to be a rocket ship to the moon, but if you'll notice, after hours, it's already up. Now, I was starting to buy Apple right about at the buy point, about basically 137. We are still in a buy zone for Apple. We have a chance to buy, to buy Apple. So if you're interested in Apple, and I think it's well worth your effort, Apple is in the buy zone. Now, right? And I really think that that's, kind of, and I'm good. I think that is very, very important, because if you want to get in on this stock, and this is really a transformational stock, there are a few stocks that are worth over $2 trillion. One of them, of course, is Microsoft. The other one is Apple. I own both of them. I think they're both excellent. Now, this is a slow but sure wins the race. One of the things I like about Apple is, even though it is a tremendous stock in terms of its valuation, it's still, because of their 4-to-1 split last year on August 31st, it's still very, very affordable to buy 100 shares of this and do a covered call. One of the ways you can really make good money, and in fact, one of my interns, he's actually in California right now because he went home for the holiday, but he has a lot of Apple stock, and he writes covered calls on them. He's been very successful, and it's a very low risk strategy. And this, if you're going to do covered calls, this is probably the best stock to do them on. It's Apple. So something you might want to consider. Definitely in the buy zone now, and looking very, very good in terms of, in terms of stock. So really like, that stock. Thank you very, very much, Kate. And I hope you have a great holiday as well, too. Thank you for those wishes. Oh, hey, thank you. Oh, hey, fantastic. You got the alert on that. I made about great. Okay. Boy, that's exciting. I really, really like it when people make money. That's my whole. If I can just help, fortunately, many years ago, I was very, very fortunate. I met a guy by the name of Howard Byron. He introduced me to Investor Business Daily. This is a long time ago. This is back when, prior to the internet, where it came as a paper, and he showed me how to use it and how to profit from it. And you know what? I have done well ever since. And a few years ago, I was a financial analyst. A few years ago, I made more money one year trading Microsoft. This is in 2017 than I was making on my job, and I was doing very well on my job too. But I was making more money at lunch trading Microsoft and Microsoft options based on the IBD. So that's what I try to do, is distill that. And if you're not if you don't have an IBD subscription, maybe you should consider getting one, because it can be very profitable. But I want to try to distill it down to the very best things that the IBD has, because you can definitely make money. This year is going to be, I have a feeling we're going to do very well this year. There's going to be a leader that emerges this year. Right now, I'm looking, and I think it's basically NVIDIA is the leader. But last year it was Tesla, and a few years ago it was Microsoft. So there's always a leader, and there's always a way to make money in any market, even if it's going sideways or down. So thank you very much for that that kind comment. All right, potential target for Apple. Very good question. I'm going to go back to the Apple slide here, the live chart for Apple. Basically, we basically want to start taking profits on Apple when it moves 20% above about 137. Okay, so if it was 10, so basically we want to add about we want to double 13. So we want to take 1350 and we will double that, so 17. So if we added that to this, we would want to start possibly looking at taking profits in about the 154 level, and that's pretty easy to do. So I think that hopefully we're going to see Apple go on a run. Now it's going to have there's going to be resistance at about 145. So it's going to move up to 145 probably. It's probably going to pull back, and then eventually it'll pull through that. I do believe, because now we're starting to see we have this beautiful base. This is called a base on base pattern. It is a classic pattern. We have this base, and then we have another base. So it's getting ready to make its run, and it's going to probably take out the higher high. And the higher high is 145. Now, very interesting thing about this higher high, and I'm going to go to the monthly chart here and show you. This high up, I actually go to the weekly chart and show you this. This is very interesting, because when it split, when Apple split 4-for-1, and that was on the 31st of last year, you can see, and this is very, very interesting how this works. It made essentially, let's see if I go back to June. Okay, so this is August 31st, if you can see right there. Well, did I get that right? No. Got to go back to, and this is the weekly chart. I'm just looking for, well, let's see if I can go to the daily chart. If you go back as far as August 31st. Okay, let's look here. So February, okay. So let's go to August. Yeah, August 31st. Unfortunately, you can't see that. I'm gonna pull these boxes off here, so we won't see those. Let's see if I can. Let's see if I can get rid of those. Let's see if I can get rid of those boxes. All boxes. There we go. All right. So hopefully in a second that will click off, and that will show you, because that was the high, basically. Yeah, there we go. As you can see, just right about August 31st here, that's when it made its high. That's when it made the 137 high. Interestingly enough. Well, that is also, it came over there, and then it was right at 137. So you can see why this is so critical, because Apple has moved decisively through the 137 area. Now it can move higher. So this is very, very interesting. Almost to the day that it split 4-for-1, that's when it made its high. So very interesting thing going on with Apple. So I do think that Apple's right now a very good position to buy it, and I do think it's going higher. And I think we'll see it probably move up to at least 145 before it meets resistance. So thank you very much for that. Apple looks bullish. Absolutely. It's very bullish right now. Apple is very, very, very bullish. All right. So let me take one last question from TikTok. Thank you very much, everybody. I'm new to crypto. Any tips? Well, right now, I think you got to be really careful with crypto. And the reason I do is because the central banks in China are trying to kill crypto. And so I would just be very, very careful. If you trade crypto, you might want to consider trading something that I trade. It's called the GBTC, the Grayscale Bitcoin Trust. And what this is Grayscale Bitcoin Trust controls about 4% of the world's Bitcoin. And I use this as a proxy because I don't trade Bitcoin directly. There's a lot of reasons, because I can't write options and that kind of. So I use the Bitcoin Trust. Currently, Bitcoin is in a downward trend because the GBTC is a downward trend. So I'd be very careful entering new positions right now in Bitcoin. Bitcoin, if it falls through about $30,000, it's probably going to move lower, maybe as low as 12,000 to $1. So you want to be very, very careful dealing with crypto. All right. Well, thank you, everybody. Thanks so much for watching my show again. By the way, we have action trade alerts, very, and we do put out stuff. I'm going to try to put out this trade tonight. Hopefully, if I get time. This calendar spread that I have, and it's going to go out basically to everybody that is on the list for free trade alerts. So it's basically to get on the list, www.sinfox.com/DallasTradingFloor, and that's of course free. And if you're on TikTok, just go to my profile, hit that link, and then you'll see it. There's a button you can push for that free spread trade, calendar spread trade on Home Depot, and I think you'll really like it. It has a 56% profit potential, and in about I guess about 45 days or so. So looking pretty darn good on that. I'm going to be back on Tuesday. I'm not going to be here on Monday because unfortunately, unfortunately, it's fortunate for me. There's going to be we're going to be off, and so the markets will be open back on Tuesday. I'll be back at 2:30 Central. Thanks again, everybody. Really, really appreciate all your questions, and hopefully I can get. Hopefully everyone is going to have a very, very nice holiday weekend. But be careful out there because there's a lot of crazy drivers. So, till then, I will see you. Happy trading.